Meantime, tonight's debate has the potential to shift expectations regarding who will win the election and based on that, sway the markets one way or the other. Here to chat about the potential impact of various election outcomes on the markets right now. On the phone with us, Barbara Reinhart, head of asset allocation at Voya Investment Management. Also, Donald Schneider, economist at the policy research team at Cornerstone Macro. Good morning to both of you. Barbara, you know, the question is, do you believe that there's a possible change in the outcome based on tonight's debate before we even get into the implications of all this?
Right. So it's well known that debates generally do not affect swing voters. It seems to be as though it solidifies pretty much people that were already going to vote for Trump are already going to vote for Biden. But I do think because of the, unique nature of these two candidates not really being able to be on the campaign trail, it maybe has more of a possibility to swing some of those undecided voters.
You don't think, Barbara, though, that there are certain people, maybe less on the Trump side, more people looking to try to understand whether Biden is, dare I say, up for the job? You heard Elon Musk yesterday make a comment that he said he's undecided, but he wants to see the debate. If he performs well in the debate, that might be more interesting. But I think there's some people who think maybe he won't perform well in the debate.
I think it is indeed up for grabs because there's been a narrative around his ability to really perform well, given that he would be the oldest elected president. But I do think that it's very narrow on the margin of people that are undecided voter. I think it's less than 6% of the voting population at this point. So a number of people have already made their decision. And additionally, mail-in voting has already started in a number of states.
Hey, Don, let's talk about the market implications of this. Are you of the view, as are, the conventional wisdom, I think, is that if Biden were to win, at least short term, there might be stock sales later this year, people trying to capture tax advantages now if you think that there's going to be higher taxes later. I don't know what you think that means for the longer term. I don't know if you think that if Trump wins, that's good for the market. Short term, maybe it's good for the market. Long term, what do you think?
Yeah, there's a number of questions there. On the capital gains question, or the odds that taxes are higher, I think it depends on what your investment horizon is. If there are going to be tax increases in the short term, and if Biden wins, I think that's very likely. Then I think there are arbitrage. People are going to sell off, et cetera. But then there's broader questions about what is the effect of his agenda on the economy in the short term, as well as the long term. In the short term, his agenda is highly stimulative. He's much more likely to pursue a broader stimulus package, say along the lines of the $2.2 trillion bill that Pelosi has recently outlined. He's much more likely to pursue that in the short term than, say, would a status quo environment with Trump as president. And his broader agenda, he's prepared to spend more than he's going to tax. And I think that's broadly stimulative in the short term, even if it may not be in the long term.
Well, so that's the question I'll ask you, Barbara. Which do you think the markets will like better?
I agree that is indeed Biden's tax plan would be more than offset by the stimulus program and the funding that he's going to be put to fight the coronavirus. I do think that over the longer term, it's probably going to be close to a wash over, say, the next 4-year period. But I think the economy is in desperate need right now of an extra stimulus plan, and I think also just a comprehensive plan to combat coronavirus as well, would be well received by the equity market. However, there is also the change in leadership, right? Having an incumbent lose their reelection campaign generally can cause a little bit of instability in markets, but it generally gets pretty much past it within 4 to 6 weeks after the election.
Shepard Smith here. Thanks for watching CNBC on YouTube.